Welcome back, ladies and gentlemen. It's your boy Shades and Trades. Feel free to hit the like and subscribe button. Today we are going to talk about Aitx and making a comparison to the S&P 500. And I'm also going to put things into perspective for you because some of you forget that you are actually an above average player in the stock market if you are being disciplined and patient, guys. Because some of you sometimes you see the stock not moving, and some of you just fall off the face of the earth for some reason. So today I'm going to put things into perspective for you. It's going to be a fun video, and we're using the weatherman format. I'm going to be sitting here talking to you guys into the camera. So here is the S&P 500 overlaid on the Aitx chart. S&P 500 hit a low on October 23rd, 2023 of 406.43. And then recently, on August 26, 2024, the S&P 500 hit a high of 563.68 before pulling back. Everything pulled back. But what I'm trying to show you here is the S&P 500, which is a very safe ETF to put your money into. It didn't even do 50%. Think about that for a second. It didn't even do 50%. In that same time frame, Aitx went from 002 to 006 for a nice 300% run, which is already way more than the S&P 500 has offered since 2023. And then it gave you a second chance down here. Came back down to double zeros and almost broke one penny for a nice 500%er. And now it's back down here again. People are crying. People they're so short term. They don't think about the big picture. They don't put things into perspective. And I'm showing it to you right now. The people who invest in the S&P 500, they're people who want to play it safe. They don't want to trade penny stocks. They don't want to deal with trading. They don't want the stress of trading. They don't want to deal with picking stocks. I'm just going to put all my money into the top 500 companies, the S&P 500. That's why it's called the S&P 500. I'm just going to put it into this ETF and sit on it, and I'm going to average into it every month or lump sum every year, whatever their strategy may be, dollar cost average, whatever it may be, lump sum, dollar cost average. This is what they do. Because it's much safer than buying a penny stock or picking stocks for a portfolio. They just go into the total stock market index, SPY or VOO, whatever ETF they want to put it into, that is known as safe. But here's the thing, it may be safe, but you're never going to get these huge returns in such a short amount of time. And we all know that you guys are trading penny stocks or invested in penny stocks because you want massive returns fast. You don't got 47 years to invest in the S&P 500. And I'm going to show you this right now because this is interesting. Again, I'm trying to put this into perspective for you guys. I know some of you are smart, like really smart, so you probably already know this. You probably already know like where I'm going with this. But if we go, I guess it got deleted. If we go to S&P 500 SPY total return calculator, I'm going to show you how many years it would take for you to make any significant amount of money on the S&P 500 if you were to invest in it. There's NerdWallet. If you were to invest only in the S&P 500 and take the safe route, because it is the safe route. But you'll notice, I'm going to show you here right now, the annual total return history by percentage since 1994, 0.40% return, 38, but not 50%, 22, 33, 28, 20, and then, there was some bear markets, of course, negative 21, 11, negative 9, and then negative 36 here, 2008, of course, that happened. Then 26% return, 32%, 1.25, then the bear market, that happened in 2022, of course, negative 18%, and then a 26.19% return in 2023 after the recovery from the bear market. Do you see 50% anywhere here? I'm looking through it. I don't see. The highest I've seen is 38% way back in 1995. Back when it was probably cheaper too. Why it was sitting at what, $50, like $60 or something ridiculous like that. So over the long term, the price of this ETF continues to grow. It appreciates in value, but it's going to take you, if you're only invested in the S&P 500, it's going to take you. This is how long it's going to take you. Let's say you're 18 and you have this ideal, perfect life where you have the next 47 years, the world is your oyster. You're going to start with a deposit of, let's say you're 18 years old, you started working at 16, and you have 10K to invest. You put 10K as your initial deposit, and every month you're going to put in $1,000. and you're going to contribute every month 1,000. Okay, so for the next 47 years, from 18 to 65, this is your game plan, right? And your annualized return is going to be 10%. Let's switch it to annual. And the reason it's 10% is because if we look up, let me Google it for you guys, S&P 500 average, the average annual return for the S&P 500 is, what is it? The S&P 500's average return over the past decade has been around 10%. So that's why I'm going with 10%, because that tends to be the average if you just focus on SPY, because you don't want to deal with stock picking, you don't want to do penny stocks, you don't want to deal with the stress of trading, none of that. You're just going to focus on this one stock. You got 47 years ahead of you, and here is how much you end up making if you actually sit on it for the next 47 years. And again, this is assuming you live like the perfect life, but as we all know, nothing ever goes the way we want it. Sometimes things happen. I learned that a year ago. My life was perfect. I thought everything was going great. Had a heart attack. It is what it is. I'm recovered. I'm feeling great. I have a lot of energy. And look, things aren't always perfect. So, but assuming you live like the perfect life where everything just goes well, no health issues, nothing crazy happens, assuming everything just goes well for the next 47 years, your total balance after 47 years of following this game plan is $11,817,007.42. So over the course of 47 years, you were able to turn that 10,000 into 11 million. Well, you're putting in 1,000, you're contributing 1,000 every month, or 12,000 every year. But yeah, that is your net return. But guess what, guys? It takes 40. I don't know about you. I don't got 47 years. You probably don't got 47 years. Unless you're 18 and watching this, then maybe you do have 7 years in front of you. Then maybe you should get a job and start following this game plan. This is real, guys. This is what people do. They play it safe because you can get into the millions. Well, some people don't start at 18. Some people aren't smart enough at 18. We've all been 18. We're not really the brightest at 18. So like I said, this is idealized. This is assuming you're like the perfect person, never has any issues, never has to take the money out for some accident or whatever the case, some emergency, whatever the case may be. So assuming the perfect life, 11 million, almost 12 million, let's round it up. Okay, but this takes 47 years. That's a long time. That's a long time. So I wanted to put this into perspective, because it would take someone 47 years to get any significant amount of returns. Whereas in 1 year, you were able to get a 300% run and then a 500% run. And if you put in, because I know some of you put in 5 figures, if you put in 5 figures worth at 002 and it went to 006, you dumped it on someone's head, someone bought it at the top, and because it's a bag or be bag kind of game, especially with OTC, you turned, let's say you put in 30K, you turned 30K into, let's say, 90K. And then you bought back in with that 90K down here, and it went to 1 penny. I mean, you just turned 90K into, you just got into the 6 figures. And so you were able to turn 5 figures into mid 6 figures in the same time that the S&P 500 only made less than 20% return for their investors, for the long-term players. And if you're invested in Aitx long-term, I implore you to take advantage of these huge, huge pumps, because you're already performing better. If you made money when I called this run here, and this previous one as well, you're already like head and shoulders above most players in the market, because that's insane. I think some people are so used to seeing these big run-ups on penny stocks because of 2021 that they forget that actually making 300%, that's insane. 500%, that's insane too. That's insanity, because the people who play it safe, just sit on an ETF like the SPY, they don't get that. It takes them 47 years to even get that kind of moolah. Whereas you can make a lot of money fast, much faster than them. You can get to the millions fast, but you gotta be willing to take the risk, right? And I don't know why people, I don't get it, man. I don't see why people are disappointed with the Aitx, when I just showed you how long it takes for the safer people out there who like to play it safe. It takes them forever. And everything, it has to be like the perfect life where you have no issues, no emergencies. You know what I'm saying? If you have kids, I mean, you don't know what's going to happen. So unless the next 47 years are perfect for you and you're 18, then you're gonna have 11 million in the bank by 65. You're gonna have a lot of money. But someone that's disciplined and patience, and that is willing to take the risk of putting in a lot of money into penny stocks. I mean, you could have easily turned 5 figures into 6 figures these past 2 runs, just this year alone. And next year, you might be able to turn that 6 figures into millions. So in 2 years, assuming the Aitx stock continues to have 2 runs a year, you can easily turn, let's say if you start with 30K, you can easily turn that into $1 million in 2 years, which is already, that's insanity. But obviously it's easier said than done because you have to take such a big risk. And a lot of people took that big risk way back in 2021 and it didn't work out for them because they bought the top, unfortunately. But here's your opportunity to buy at the bottom and make a huge net positive return, and all it takes is patience and discipline. And if you can do that, you're already going to be head and shoulders above most market participants and even the ones that hold for the next 47 years or whatever their time frame may be. So I just wanted to put that into perspective. I think a lot of people get a little too down when the stock doesn't move. But for me, I think people are just, their mentality is all screwed because of 2021 and all the huge pumps that happened then. But we're not in 2021. This is a different market for the OTC. There is money to be made, and a lot of it. If you have 5 figures, you might be able to turn it into $1 million in the next 2 years. Well, maybe not because of the reverse split, but I mean, this thing, that's insanity. 300%, 500%, and some people aren't happy with that. And I think I just wanted to put into perspective, guys. In 2 years, if everything is perfect, you can literally turn 5 figures into $1 million plus. And I say perfect because obviously the example that I showed you with the S&P 500 assumes perfection. It assumes your life is just going to be perfect for the next 47 years. No emergencies, no health issues, no nothing, just a perfect life. So that's why I'm using the idealized, the perfect example. But we know that's not how it is, right? And so that's it for the video, guys. I just wanted to make sure that you guys, take the mask off and realize that we're in a different time. There's a lot of money to be made. You're already a better player, better market participant than most. As long as you're not the one that averaged down from 25 cents or 50 cents or whatever. I mean, right now, I just showed you, if everything was perfect, how much money you would make. A lot of money. Shy Guy's getting too close.